Good morning and welcome to today's webcast, Forms 1042 and 1042S, what you need to know before filing. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams. Erin Fennimore, Information Reporting and Withholding Director in our San Francisco office, and Jill Dymtrow, Information Reporting and Withholding Director in our Southern California office. And with that, Erin, I'll turn it over to you to get us started.
Thanks, Emily. Hi, everyone. My name is Erin Fennimore, and as mentioned, I sit in our San Francisco office. Today, we're going to be going over everything that you need to know for your 1042S and 1042 reporting. Just looking briefly at the things we're going to cover. First, we're going to touch upon those upcoming filing deadlines, and if this is the first time you're hearing that you have an obligation to file, we do have extensions available, so we will go over that. Second, we're going to turn to what payments are actually in scope for 1042S reporting. Then, depending on whether you have payments that are actually in scope, we're going to look at those actual forms, 1042S and the 1042, and all the very detailed codes and information that's required. One of those topics that can be a bit confusing is that foreign taxpayer identification number and the date of birth, and whether or not you should be listing those on the Forms 1042S. And then lastly, we're going to run through a few case studies. These are based upon common scenarios that we see, and we're hoping that they'll be helpful. So with that, I'm going to turn it over to Jill Dymtrow.
Thanks, Erin. All right, first up, we have a lot to cover today. So first up, we're going to talk about filing deadlines and extensions that are available. So essentially, your Forms 1042S, which is the information return report, 1 copy goes to the IRS and 1 copy goes to the payee, and 1042, which is the tax return, are all due on March 15th. So essentially, what this means for timely filing for those forms that are mailed to the IRS, they must be postmarked by that date, and forms that are mailed to the recipient must also be postmarked by that date. An important note here is that the IRS doesn't permit electronic mailing of Forms 1042-S recipient statements. So that means that sometimes we have companies that want to send 1042-S electronically to their payees for any number of reasons, and that's okay. But there is still an obligation to execute a paper copy mailing to the payee. So you can do them both, but there is a requirement to go ahead and mail a hard copy to recipients. Electronically, you're allowed to electronically file Forms 1042-S with the IRS. In fact, if you have more than 250 of those forms, you must electronically file them with the IRS. If you have less than 250, you can mail them to the IRS, but then you need that cover sheet of the Form 1042-T, the transmittal, to go along with that mailing. Now, automatic extensions are available and will extend the deadlines. It's a 30-day extension, but because April 14th falls on a weekend, this year you have until April 15th to actually file the Forms 1042-S with the IRS and the recipient if you apply for that extension. So we say that it's automatic, which is great, but it just means that you still have to apply for it, and they're not going to reject it if you apply for it appropriately. An extension is available for the Form 1042. That is a 6-month extension. So you get until September 15th. Keep in mind that is an extension to file the actual return, not an extension of time the tax due would be able to be paid. So you still have the deposit requirements as they naturally occur, even if you file for the extension for the 1042. The way to request those extensions for Forms 1042-S that go to the IRS, there's a Form 8809. It can be filed really easily through the IRS Fire system automatically online, or you can mail that into the IRS. If you need an extension for the 1042-S recipient copies, that is a different extension request. It's a letter sent to the IRS. The information and requirement for what needs to be in that letter is in the 1042-S instructions. Essentially, you give them the basics: name, address, and TIN. Tell them that you need an extension, and you send that into the Kearneysville IRS office. And then the 7004 must be filed on paper, and that's an extension request for the 1042. So if you're planning on filing later than March 15th for these forms, you do need to file extensions for each piece of this filing. And turning it back over to Erin to talk about payments and scope.
Thanks, Jill. All right, so if you're asking yourself, what is this concept of 1042-S and 1042? At a very high level, if you are making payments of U.S.-sourced fixed, determinable, annual, or periodic, otherwise known as FDAP income, that is subject to 1042-S and 1042 reporting. Now, depending on those types of FDAP payments that are being made, which we're going to get into, there could be a corresponding withholding obligation. The 1042-S is required to be issued and filed regardless of whether there was actually withholding required. So that's kind of a common confusion point where, okay, well, I didn't have any withholding. Do I still need to file that Form 1042-S? And the answer is yes. And if you have filed one 1042-S, you also have to file the Form 1042. The way I kind of think of these concepts, if you have a 1099 with backup withholding, you got to file that 945. It's similar. If you have a 1042-S, the 1042 is also required. So just make sure that if you are making payments of U.S. source income, FDAP income, you are looking into the fact, have we ever done these filings of 1042-S and 1042? Now, taking a step back, I have a lot of clients that say, okay, well, that's great to know, but how do I even figure out if I have those types of payments? Should I be withholding? So I always tell my clients, you should be asking two things when you're making payments. First, are you making a payment of FDAP income? Second, what is the source? So right now we're going to touch upon what is considered a FDAP payment. So at the most common Interest, dividends, and royalties. If you're making any type of interest, dividend, or royalty payment, whether it's being paid to a third party, that could be an investor, a vendor, a contractor, or a related foreign entity, which is going to be your intercompany payments, you should be looking at those. And we're going to move on to the source next, but first and foremost, if you're making those types of payments, you should put those on your radar. Second is bank deposit interest. And this is really going to apply specifically to my fund clients and my banking clients, and it's really confusing the way the IRS has set this up because there's a lot of special rules that apply. First, this is the only type of FDAP payment that actually has a threshold. For all these other types of payments we're talking about, if there was $1 paid of that U.S. source FDAP income, it is subject to reporting and potentially withholding. But that's not the case with bank deposit interest. So first and foremost, have you paid over $10? Then secondly, you have to look at who you're paying that bank deposit interest to. Entities, there's no corresponding reporting obligation. Individuals, there is. But to make it just that much more confusing, the IRS keeps updating the list of the countries with which apply to those payments of BDI to individuals. So currently, the most current list is in RevProc 2018-36, and there's a listing of all the countries with which the United States have an information sharing agreement, and those are the countries that you would be subject to reporting bank deposit interest. So if you are paying, bank deposit interest to an individual that's not listed in one of those countries, then you don't have to report. Next, we're going to turn to board of director payments. So this is a big area that's commonly overlooked. If you're paying board members for services that are being performed in the United States, almost always it's for U.S. meetings, that is subject to not only reporting but withholding. So almost all of the treaties that are out there, they don't have that carve-out for the exemption of withholding. So typically it's a 30% withholding for any U.S. source payments being made to board of directors. So pay careful consideration to that. The next, any payments that are being made to foreign independent contractors that are performing services in the U.S., those are also FDAP income. And then, breaking that down into even more detail, okay, well, what are payments that you could be making to foreign independent contractors? This is going to be for consulting, legal services, those type of payments. And, it applies to both individuals and entities. And the way that you get around that withholding and the documentation you have to collect can vary depending on whether you're paying a non-U.S. individual versus an entity. So again, pay careful consideration to those types of payments. And then just your general foreign vendor payments. So again, consulting, legal services, rents, leases of real property, software and license payments is an area that is very tricky because depending on the type of software that you're making payments for, it can be treated as a good, which wouldn't even be subject to reporting. Best case scenario, no withholding, no reporting, or it could be considered a royalty because you're paying that annual license. And most countries do not have 0% withholding for royalty payments, and they can vary depending on the type of royalty payments. So you just want to pay careful consideration to those. And then conference attendance or sponsorships, royalty payments again, advertising payments, and then transportation and courier payments. Again, another area that has specific details on how you classify those types of payments and the corresponding withholding. So now that I've fully confused you on the type of FDAP payments, we're going to look at the next question. So you've determined, yes, I am paying a Spanish legal law firm for legal work. Okay. And your next question is going to be, where are those services performed? So once you determine you have FDAP payments, you have to look at the sourcing, because what we're specifically looking for here is U.S. source FDAP payments. If it's foreign source, it's not subject to reporting or withholding. And and each type of FDAP can have different sourcing rules. So I'm just going to go over, a few general ones, the most common ones that will hopefully apply to the payments you're making. For any type of services, so these are going to be your independent contractors, it's going to be your consulting work, your legal work, anything else that you're paying that involves services. It's the location of where those services are being provided. Where it can get tricky and where you have to make sure that you're really tracking and customizing those invoices you're receiving is when there's a hybrid. So 50% of the work is being done outside of the United States, but then 50% is also being done in the United States. So pay careful consideration to those and make sure your invoices are reflecting, $10,000 for work performed outside of the U.S., $10,000 for work performed inside the U.S. Because you want to detail that out, because if there is a withholding obligation, it's only on with respect to the U.S. sourced portion of that payment. And then your reporting would also be with respect to that U.S. sourced portion. So, it's a good thing to look at and make sure the way that you're making those payments and receiving the invoices is very specific to that. And then royalties, it's going to be sourced where that IP is being used. Rent, it's going to be the location of the property. Interest, it's going to be the domicile of the payor, and dividends, the domicile of the company. So all considerations that should be accounted for in your analysis of whether or not you have payments that are subject to 1042-S reporting. All right, Emily, we have our first polling question.
All right, our first question. How many payments of U.S. sourced FDAP is your company making per year? And your options are 1 to 5, 5 to 10, 10 or more, or I don't know. And I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit submit. If you're having any trouble seeing our polling questions, simply refresh your browser with F5. I'll give everyone a couple more seconds here. And let's go ahead and take a look at the results. Back to you.
All right, thanks, Emily. So for those that have answered, 36% have answered, I don't know. So this is a great time to do a query of, the payments. Depending on the type of system that you're using, do a query of those vendors or payees that have been paid for 2018. Try and extract as much data as possible in terms of what you're paying for, and if you do have, typically we sort by the country of that payee. You want to pay careful consideration to those. Also, any payee with a TIN, which is a taxpayer ID number, beginning in that 98, pull those out of that population, and you're going to want to start taking a much closer look. Also, a consideration to be made, you want to look at whether or not there are some improvements to your onboarding process that can be made to ask these questions up front so that you know the answers and you're not trying to determine your 1042-S population, in March when the reporting is almost due. For those people that know they actually have those payments, I'm hoping that, you've already done the kind of due diligence of making sure that they're documented, looking at the source, making sure there's no withholding applicable, and if there is withholding, you have already done it, and you are ready to go for your reporting season. And with that, I'm going to turn it back to Jill, and we're going to get into the details of the actual forms.
Thank you for that reminder. I was talking on mute. All right, sorry about that. Anyways, I'll take over and kind of go over some of the Form 1042-S mechanics reporting. And one thing I wanted to touch on is that There were some questions about a statement I had made previously about hard copy recipient statements being required for Forms 1042-S. That is traditionally how it's been required, but I did check out the new publication 1179 that was updated in September of 2018, and now it does include the Form 1042-S for allowance of electronic recipient statements along with a bunch of the forms 1099 and 1098. So update, this is new, but you are allowed to include a 1042-S to a recipient. You are allowed to deliver that electronically now. You can't just email it out. It has to be kind of a push-pull process, but it is in that publication now for allowance. All right. So general rules of Forms 1042-S. A lot of times we work with people who do a lot of 1099 filing and are kind of used to those general rules, and then they look to 1042-S filing, and there's a lot of differences there. So we like to point those out in case you are, someone who has a lot of experience with 1099 reporting and now you're moving over to 1042-S. So one common misconception that we find is that on the Form 1099 there are a lot of types of exempt recipients you wouldn't have to report, like corporations and state and government entities and things like that. On 1042-S reporting, exempt recipients, making a payment to an exempt foreign recipient does not get you out of 1042-S reporting. So foreign corporations, foreign government entities, and even international organizations like the United Nations are all reportable. I know that there's a lot of misconceptions about what things like international organizations are. And then, obviously corporations are subject to withholding tax when you're making payments offshore. So there are a lot of reasons why they do want all of those payee types reported on Forms 1042-S. There's also no de minimis threshold for reporting on Forms 1042-S unless we're talking about bank deposit interest. So bank deposit interest is kind of a weird outlier for a lot of this. I know Erin touched on it before about, you report individual payees if they are residents of specific countries, but bank deposit reporting does have that $10 de minimis amount, that if you pay less than $10 to an individual, you wouldn't issue them a Form 1042-S, but for everything else, Forms 1042-S are issued upon the first dollar paid. So this can be quite burdensome for fund clients who have, a significant payment, but they're distributing it to a lot of foreign investors. But that's the rule. So the first dollar that you pay does make its way to a Form 1042-S. All right, so next polling question, I'll turn it over to Emily for that.
Great, thank you. Our next polling question, how many Forms 1042-S does your company issue each year? And your options are 1 to 5, 5 to 10, 10 or more, or I don't know. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. We are on our second question. I'll give everybody a few more seconds. And let's take a look at the results. Jill, back to you.
All right, thanks, Emily. Really similar to the results of the making payments of FDAP income question, funny enough. So that's kind of good that it aligns with if you're making payments. It looks like you're probably reporting them. All right, moving on for the standard required data elements for Forms 1042-S. So there's lots of data elements on that form, and there are different scenarios in which you would be required to complete different ones. But as a standard, when you're filing a Form 1042-S, you would always include an income code to let the IRS know what type of income you're paying. You're reporting the gross income paid. So this is the total amount that was owed prior to withholding. So if you owed somebody $100, but you only paid $70 to that person because you put $30 into the IRS withholding account, you would still report $100 as the income paid. You'll need a Chapter 3, Chapter 4 indicator. We'll talk about that in more detail. You'll be required to enter in a tax rate for both Chapter 3 and Chapter 4. You'll need an exemption code for Chapter 3 and Chapter 4, and we'll talk about that a bit more, but in general, where you have a 0% withholding rate, you do need to substantiate that with an exemption code. Otherwise, the exemption code would be 00. So tax withheld, important field. This form is a receipt for the tax that has been withheld from that filer. They can use this form to file a U.S. tax return and potentially make a reclaim of any tax withheld, so that's really critical. You'll want to put the recipient's identifying information, including name, address, U.S. or foreign TIN if they have provided one, and the date of birth if you're making a payment to an individual. A recipient's country of residence and country code, and then the recipient's Chapter 3 and Chapter 4 status code. You'll also need to include the withholding agent's information, so name, address, TIN, country code, a GIN if that's applicable, and then a withholding agent Chapter 3 and Chapter 4 code. So moving on to more detail on income codes. So the Form 1042-S is specific to income type. So if you are making a payment of dividends and interest to a single investor, you would issue 2 Forms 1042-S. So kind of the most traditional codes that we have used over the years for investment payments is a portfolio interest of 01. Dividends paid by a U.S. corporation have traditionally been 06. In the Form 1099 series, you see, the MISC, the B, the DIV, the INT. You don't have those for Forms 1042-S. Everything goes onto the single form, which is why the coding can get complicated. Another thing that makes the coding quite complicated is that the IRS oftentimes shuffles those codes around. So there's codes that we've used for years and years for a certain type of income, and then it'll change to something different. And each year we try to lobby against that, saying, there's 99 options here, and they're not all used. So where you need to use new income codes, maybe just use one that wasn't something different last year. But we've not been successful in that effort. So particularly where you're coding your systems to identify income types and using those for 1042-S reporting, be really careful about how you're doing that and that it's reviewed annually when the instructions come out. New codes for 2018, and this is really critical, and it kind of is going to inform us a bit about the new foreign U.S. or foreign TIN requirements. So interest and dividend codes have been added for interest and dividends that are paid on actively traded securities. What's the difference between interest and dividends that are not paid on actively traded securities is that where you have these income types that are paid on actively traded securities, you are not required to have a U.S. or foreign TIN in order to substantiate that treaty. If you are reporting dividend income as a 06 code, that's telling the IRS this is not actively traded income. So reporting that without a U.S. or foreign TIN wouldn't allow for a reduced rate of withholding. So where you are making payments of actively traded interest or dividends, be very careful to use the codes 51 or 52. There's a lot of new requirements that have come through on the forms W8, and kind of the way that this works is generally you'll find a new data element on the forms W8 that you're required to collect from your foreign payees, and that field eventually makes its way onto the Form 1042-S. Initially, it's not a required field on the 1042-S because they are making an exception for the fact that your Forms W8 will expire in 3 years, and then you'll have to get a new one, and then you'll have to follow the new instructions that have been issued that requires that data element. But just be really careful about this, because as you see additional data elements that arise on the forms W8-BEN and W8-BEN-E, you'll need to identify how to capture and validate those, because eventually they are very likely to make their way onto the 1042-S as a requirement. Another field that we'll look at is the chapter indicator and exemption code. So these can be confusing. The chapter indicator will identify whether an amount was withheld under Chapter 3 or Chapter 4. And basically the rule for this is if you have applied FATCA withholding that's going to be demonstrated in box 4B as 30%, then you put a 4 in that box of chapter indicator. Everything else is a 3. So if you made a payment and you didn't withhold anything, that's a 3. If you made a payment and it wasn't a FATCA payment and you withheld under Chapter 3, that's a 3. If you made a payment that was in scope of FATCA, but they were documented for FATCA, and so you didn't withhold under FATCA, that's a 3 too. So essentially only if you have a FATCA withholding applied will you put a 4 in that box. The validations of forms W-8 instructions to the 1042S provide the required codes for exemption codes. And the exemption code rule is pretty straightforward in that if you have a tax rate that is 0, you will need a corresponding exemption code. So if you have reduced the tax rate to 0 because of a treaty, it's, the exemption code is 04 for Chapter 3. If you have reduced the Chapter 3 tax rate for treaty, but it doesn't go all the way down to 0, so say you're withholding on dividends at 15%, your exemption code is still 00. So either where you look at boxes 3A, 3B, 4A, 4B, one of those is going to be 0 on each side. So either exemption code 00 and you have a tax rate greater than 0, or you have a tax rate of 00 and you are required to put in an exemption code. So that can be a little bit confusing, but in general, one of those is going to be 0. All right, some new data elements that we've seen popping up on the forms 1042S. Unique filer ID was on there as of 2017, and what that is a 10-digit numeric. It shouldn't be the account number. It shouldn't be a taxpayer ID number. It should just be a unique form identifier that will identify that form, not that payee, not that income type, just that specific form. So if you've got a payee that receives dividends and interest, you're issuing them 2 forms 1042S, you need 2 different unique form identifiers. And the only thing the IRS is using this for is to be able to track amendments. So when you issue a form and you're going in to amend it, it wants to connect the amendment with the original filing, and that's the only reason for this unique form ID. And most reporting systems will just automatically fill that in for you and randomly generate one for you, and I recommend using that mechanism. So if you are issuing an original form, 10-digit numeric. If you're amending that original form, that same 10-digit numeric plus the amendment box plus number 1 in the amendment number, and so on, just increasing the amendment number each time you have to amend it. The next thing we can talk about that's required for 2018 in most circumstances is payees documented with forms W-8 Ben E in the 2016 or 2017 revision date. With the treaty claim, we'll need to provide an LOB provision code in box 13J. So let's take a look at what that is. It is conceivable that you will have treaty benefits provided that are listed on the form 1042S without an LOB code for the year 2018, because you may still have some 2015 forms W-8 Ben E that are still valid, and that's what you're reporting. But starting next year, any of those 2015 forms will be expired. Your payees will all, if we've done it correctly, be documented on a 2016 or 2017 version of the form, and in order for a treaty benefit to be valid, they will have had to fill out this limitations of benefits box. So this year you have a pass if you have some of these without LOB codes, but it may be a good project to, as you're repapering those investors, to make sure you're collecting these LOB codes and storing those for 1042S reporting purposes. Essentially, the box that they check off in that 14B will correspond with a code on the instructions. I don't expect these to change over the years, but always keep an eye out for that. And that code gets listed in box 13J. So this is for entities that have received a treaty benefit on that tax form. All right, a few common errors. If a reduced rate of withholding is provided, a TIN, a U.S. TIN or foreign TIN should be on that 1042-S unless it is actively traded dividends or interest, and if so, you must use those income codes 51 or 52. A recipient's country of residence, if that treaty has been granted, should be a tax treaty country. So if you're using exemption code 04 or even using exemption code 00 but have a 15% rate on dividends, it would be a really good idea to make sure that that recipient has a treaty country listed as their country of tax residence. If you're using exemption code 01, this means they've made a claim that the income is effectively connected with their U.S. trade or business. They've given you a Form W-8 ECI, which would not be valid without a U.S. TIN. You've got to include that U.S. TIN on the form. Tax rate, the formula for tax rate is gross income times the tax rate should equal the tax withheld. This isn't always the case, whereas sometimes there's over withholding applied that you wouldn't have been able to return to the payee, so that you need to make sure that the correct amount of tax withheld is demonstrated on the form because it is their receipt for reclaiming tax. And the tax rate should always be demonstrated as a 4-digit code. So, 00.00, 15.00, 30.00, et cetera. And it should be one of the rates listed in the valid tax rate table in the 1042-S instructions. So you wouldn't, if you over withheld, you wouldn't list the tax rate as like 34%. That is not a valid entry, and if you're e-filing, that would get rejected. All right, and I'm turning it over to Erin to talk about the 1042 mechanics.
Thanks, Jill. So now that we've gone through the actual Form 1042-S, we're going to look at this Form 1042. And what the 1042 is really the tax return that's a summary of all those payments you've made that are that are classified under Chapter 3 or Chapter 4, and the withholding tax liability if there is any. So it's really that annual snapshot, whereas the 1042-S is that specific payment and that specific payee. So just looking at the actual form, the first page is really going to be a record of all of the withholdings that were due throughout the year. So if you look at it, it breaks down January through December into quarterly periods, and you will have to then list that withholding that was due depending on the type of payment that was made. And, one thing to note, the withholding is due at the time of payment. This is on a cash basis. So, if you make that payment on January 5th, you got to list that corresponding withholding if there is any on that January 7th date. You need to make sure it's deposited within the time frames prescribed, which is going to vary depending on the size of the payment. And, at the end, as we go through this form, you're going to see how that all is listed out in summary. So what the IRS does is that they take this withholding schedule and the deposits, and they reconcile that with the 1042 account. And one common mistake we see with a lot of our clients is every year there is a different 1042 account. So it's per year. So 2017 1042 account, 2018 1042 account, and that can get a bit confusing. And so we have clients that for 2018 actually deposited all of the withholding that was due for 2018 in their 2017 1042 account. So one thing that we always recommend is getting your account transcript prior to completing this Form 1042, because it's going to highlight a couple issues. It's going to highlight, did I actually deposit the withholding into the correct 1042 account? Did I actually deposit the correct amount of withholding? And that's going to help you with the reconciliation and how to complete this Form 1042. You basically want to do everything that the IRS is going to do behind the scenes reconciling up front, so you're not surprised by any discrepancies. So moving on to the next part of the form, this is where we get into all of the sum of the actual withholding done for the entire year and the actual payments made to the IRS for that withholding and the payments deposited. So it's just a reconciliation to make sure I owed this much for withholding, this was my, withholding liability, and these are the funds I deposited. Sometimes there can be deficiency, so you would enter, the balance due. Or sometimes you paid too much and you didn't actually owe that much to the IRS, and so that's where you're going to claim the over withholding, and you can either get that as a credit, which rolls forward to the next year, or you can get it refunded. Now, with the rise of FATCA, the Form 1042 used to be one page, and then came FATCA, so this whole notion of Chapter 3 versus Chapter 4. And when we talk about FATCA, we're talking about payments made under Chapter 4 and whether or not they're subject to FATCA. In general, they're financial payments, but now there's a whole new section just on classifying whether or not those payments and the withholding was due under Chapter 4. So this is what Section 2 is really aiming to identify, all of the Chapter 4 liabilities. Oh, Emily, we have another polling question.
Okay, our third polling question. If your company makes a payment for a contractor that performs work in the UK, is that reportable? And your options are yes, no, or I don't know. And for those of you that would like a copy of today's slide deck, you can download them from the folder that says Slide Deck and Handouts to the right of the slide view. We will also be sending slides via email after the webcast. I'll give everybody a few more moments to make a selection. And let's take a look at the results. Erin, back to you.
All right, thanks, Emily. So if a company is making a payment for a contractor that performs work only in the UK, is that reportable? For all those answered no, it is not reportable, you are correct. So this goes to that second question in my two-pronged question set. One, this is FDAP. So you're paying for services, personal services by a contractor. But my second question was, where is it being performed? In this case, it's being performed outside of the United States, specifically in the United Kingdom. Therefore, it's not U.S. source. So that payment kind of fails that second prong, so it's not subject to reporting or withholding for 1042-S purposes. Moving on, I'm going to turn it back to Jill, and we're going to look at the foreign TIN and date of birth requirements.
Thanks, Erin. So foreign TIN and date of birth have been something that the IRS has focused on in the past few years for the purpose of data sharing with other countries that we have information sharing, information exchange treaties with. So really critical for foreign jurisdictions to be able to identify their residents who are making income in the U.S. So there's been a lot of back and forth on these rules and then extensions and things like that. So we thought that these warranted their own section. So first of all, when are you required to list a recipient's FTIN on the Form 1042-S? Because the IRS thinks that the greatest risk of tax evasion occurs with financial payments, that's really where a lot of this is focused. So if you're a U.S. financial institution, and the IRS would know that you're a U.S. financial institution if you have assigned yourself withholding agent, Chapter 3 Code of 01, and you're reporting a financial payment, interest, dividends, things like that, to a foreign entity or individual whose account was opened January 1st of 2018 forward, then you have to include the foreign TIN. There's a few exceptions that apply for residents of certain jurisdictions, but that's the rule. And here you have another scenario where you can kind of squeak by something in 2018 for your reporting, but in 2019 there's really not going to be any relief. So for your newer accounts, if you're a financial institution, you will have been required to collect that foreign TIN for any accounts open starting January of last year. Now, if you have older accounts that you didn't ever collect a TIN from, now the IRS has given you through this year to collect that TIN, and it better be included on your 2019 Form 1042-S. Exceptions for this are for indirect account holders. So when you're making a payment to a foreign partnership or trust, and you've collected the Form W8IMY from that foreign partnership or trust, and then you have that underlying recipient, the TIN is not required for that underlying, or the foreign TIN is not required for that underlying recipient. And they will know that it is an underlying recipient because of what is the information that's reported in box 15 in the 1042-S. And then residents of certain jurisdictions who don't issue TINs or don't require TINs. So the IRS has talked to a bunch of different jurisdictions, and they are comfortable with the fact that residents of the Cayman Islands, British Virgin Islands, Australia, and Bermuda do not require TINs. So other than that, you would have to get, a specific statement from that investor. But at the end of the day, not reporting an FTIN on a 1042-S starting next year would be done at your own peril if you are a U.S. financial institution reporting financial payments. The second issue we're discussing is the recipient's date of birth. Now, this is a little bit easier because presumably all of the individuals should have one, right? It's not like an FTIN where some will and some won't. If you're a U.S. financial institution, once again, and you're reporting a financial payment to a foreign individual whose account was opened just last year, you were required to have collected the date of birth for them, and now you're required to include it on your Form 1042-S. However, if this is an older account, you'll have through this year to collect it, and then you'll need to put it on the Form 1042-S in 2019. There is the exception here for your indirect account holders. So when you do not have your direct account holder, you've opened an account for a partnership, and these are the underlying owners, you would not need to be required to collect this. So if you have not been capturing these, hopefully, if you are a financial institution, you would have it in your perhaps AML, KYC documentation. You do need to be capturing and storing those for reporting purposes. All right, another polling question. Kick it over to Emily.
All right, thank you. And our last polling question. You'd have to file a Form 1042-S if there was no withholding, but a payment of U.S. source FDAP was paid. And your options are yes, no, and I don't know. Once you have completed all CPE requirements today, you will be able to download a PDF of your CPE certificate from the CPE Progress widget to the right of the slide view. Give everybody a few more seconds here. And let's go ahead and take a look at the results. Jill, back to you.
Great. Okay. Thank you for this. I did see a few questions on this as well. Do you have to file a Form 1042-S if there's no withholding, but a payment of U.S. source FDAP was made? Yes, you do. Even if there's zero withholding, you have to file the Form 1042-S. And if you file a Form 1042-S, even if there was no withholding reflected, you still have to file the 1042 tax return to report that there was no withholding. There were payments made, but there were no withholding. So yes, when there's no withholding, 1042-S reporting is required. 1042 reporting is required as well. And then we're going to start the case studies to talk over a few scenarios and let Erin kick that off with foreign independent contractors.
Thanks, Jill. So we tried to pick 4 of the most common scenarios that we see. And the first, I get this question almost every day, at least once a week, is payments made to foreign independent contractors. So a U.S. company hires 2 new contractors in 2018. Contractor 1 lives and works in Ireland. He never travels to the U.S. office. Contractor 2 lives and works in Ireland, but he comes to the U.S. office quarterly. So what is your 1042-S reporting obligation? First, Contractor 1 is living and working only in Ireland. So foreign source, no withholding or reporting obligation for that number 1 contractor. Now, assuming Contractor 2 has been properly documented on a Form 8233, so the 8233 is going to be what's required to reduce withholding when you're paying foreign individual contractors. So you collect that Form 8233 and the appropriate treaty claim has been made. You won't have a withholding obligation, but you must file that Form 1042-S for the income paid to this contractor number 2 for those services provided in the U.S. If Contractor 2 was not able to provide you with that Form 8233, filling it out properly, two of the required elements are going to be that treaty claim and also the inclusion of the U.S. taxpayer ID. Just keep in mind that you should be collecting the W-8 BEN instead and withholding at a rate of 30%. Now this is in the context of paying a non-U.S. individual. Say your contractor was actually being paid through a corporate entity. The documentation would be different, the treaty claim would be different, and your reporting codes would be a little bit different. But hopefully this gives kind of a high-level concept of how to analyze the reporting to independent contractors. And Jill, I'm going to turn it over to you for Board of Director payments.
All right. As Erin mentioned earlier, Board of Director payments are generally outside of the treaty. There's exemptions in each of the treaties for director payments. So in this scenario, we've got U.S. TechCo. They have a new director who's a resident of Australia. They collect and validate the Form W-8 BEN, and it even has the treaty section completed. They make a payment on June 1st in the amount of $500,000. They don't take out any withholding taxes. Should they have? Do they have to report on a Form 1042-S? So the first, we have a character answer. This is services, but we're looking for the sourcing answer here. So where were those meetings that he was compensated for held? Were they within the U.S. or outside of the U.S.? So in this scenario, we have a TechCo. They have had 5 meetings. He was paid $500,000 for attending those 5 meetings, but 4 of them were outside of the U.S. and 1 of them was within the U.S. So they have a 30% withholding obligation on that portion of the payment that was U.S. source. It's great that they have that BEN because they've certified his foreign status, but any treaty information completed on that BEN is not valid or would reduce the withholding on this payment. So they've got the 30% withholding on the $100,000. They've got to remit that to the IRS. They're going to file a Form 1042-S evidencing the payment of $100,000 as well as the withholding of $30,000, and then put that on their 1042 as well. All right, moving over to Erin's favorite topic, fund payments.
Thanks, Jill. So I work with a lot of funds, so I always find that it's helpful to run through different scenarios because a lot of times the LPs and the GPs have completely different tax characteristics. So in this, ABC partnership has 3 limited partners. Kelly Smith is a U.S. individual, Ryan Tang is a Canadian individual, and then they have Albert LLC, a Cayman Islands corporation. The partnership is paying out a U.S. source dividend. What are going to be the withholding and reporting implications? First, for Kelly Smith, this is a U.S. individual, so you don't have 1042-S reporting obligations. Obviously, it's going to be more to a K-1 reporting issue. Ryan Tang, the partnership is going to need to make sure that they have, a properly filled out W-8 BEN, and if it has a treaty claim for a dividend, the withholding would be reduced to 15%. If it doesn't have a treaty claim, then it would be 30%, or if it's not valid, it would generally be 30%. And then the 1042-S is going to be required in addition to the K-1, so there's multiple layers of reporting in this case. And then turning to our corporate LP scenario, that Albert LLC will need to ensure that we have that W-8 BEN E on file to certify the foreign status. There's no Cayman U.S. treaty, so we can't get the withholding down past 30% in this case, unfortunately. So 30% withholding will apply. And then you're going to have that corresponding 1042-S reporting obligation as well as your K-1 reporting obligation. All right, moving on. I know we're running out of time to bank deposit interest.
All right, and bank deposit interest is my favorite topic. That works out. Okay, so bank deposit interest, a U.S. bank opens 2 foreign accounts in 2018. Account number 1 is held by Marla Maven, and she's a British tax resident. Account number 2 is held by Jim Smith, and he lives in Fiji. The bank collects and validates forms W-8 BEN from each account holder. Well done, bank. Does the U.S. bank have a 1042-S reporting obligation for the bank deposit interest paid? So the first place that U.S. Bank would look would be to the balance at the end of the year on what they've been paid for bank deposit interest, and it's over $10. Then they're going to look to Revenue Procedure 2018-36 for this year's full list of countries that require bank deposit interest reporting. On that list, they will find the UK. They will not find Fiji. So they're going to issue a 1042-S to Marla Maven using income code 29, bank deposit interest, and they will not report Jim Smith on the form 1042-S, regardless of how much he made in bank deposit interest for the year 2018. And just a side note on bank deposit interest before we move to penalties is that this is a FATCA payment as well. It's in scope for FATCA. So if you're making payments of bank deposit interest to non-individuals, to entity accounts, then you do have to collect that BEN-E with a FATCA certification in order to not have that payment be subject to FATCA withholding. All right. Moving on, Erin, your go at penalties.
All right, so why do you care about everything that we're saying? It's typically because of the penalties that you could potentially face. So every year the IRS has had a steady increase for these information returns. Remember, with similar to 1099, 1042-S, when you have a situation where you have a recipient copy and the IRS copy, penalties are assessed individually. So effectively, they are doubled. So if we look at this next schedule, you think, well, $50 per occurrence isn't that bad, but that's really being doubled because you have your payee, your recipient copy, and your IRS copy. And they can go all the way up to $270, which can get extremely expensive. So a lot of times when people are assessing, what's the liability of not complying, we look at two things. Just take 30% off the top of all those payments, and that could be your potential liability for an IRS audit, and then add in all of these penalties for non-filing and late deposit or no deposit. All right, we have about 5 minutes for questions, so I will turn it back to you, Emily.
All right, thank you. We do have a lot of questions in the queue here. We'll try to get to as many as we can with the time we have left. First question, can you explain a bit more, Reid, the annual software license renewal for software used in the U.S. for a UK company?
The software is the hardest thing for outside of financial institution reporting. Software is really difficult. A purchase of software can be a good, it can be a service, it can be a royalty, depending on the characteristics. There's also pre-wrapped software rules that would lean towards it being a good. So essentially you have to look at, how you're using this and, what you're actually getting out of it, and then go with the sourcing rules for, whether it's a service or royalty. So if it's something, this is a pretty detailed question. So we're happy to talk more about it, but it's probably, there's a lot more detail than can be covered in the 4 minutes we have left.
All right, thank you. Next question. For corporations, are 1042s audited as a part of the 1120 audit, or are they separately conducted audits outside of the 1120 audit? If separate, will they audit one legal entity at a time, or will they audit all legal entities under common ownership?
So that, it used to be recently, in the last maybe 5 years or so, they were including it as part of the 1120 audit, but the IRS has recently in the past year created regional audit teams specific for audits of Forms 1042. What was happening was the 1120 auditors were really good at auditing 1120s, and then they'd get to kind of the end of the audit and they maybe had issued a 1040 IDR, but they weren't that comfortable with the content, so they would just not get to it. So now that the IRS has created regional audit teams, we have seen more audits going on the West Coast in the past year or so. So these people are really good at auditing Forms 1042. They know what to do, and it would be it's a good time to make sure you're getting into compliance if you are nervous that you haven't been in the past.
Thank you. Probably have time for one more here. What's the difference between when the Form 8233 should be used versus the Form W8 Ben?
So for this one, this goes to who you are paying. So if you are paying a foreign individual for personal services performed, that 8233 is required, and you typically get that when they are resident in a treaty country. So that will give them the basis to reduce the withholding. In the independent contractor situation, say that independent contractor, an individual, doesn't reside in a treaty country, well then you would only need to collect the W-8 BEN to certify that they're foreign because you can't reduce withholding. It's all about you're paying an individual who resides in a treaty country, and of course you want to try and get that withholding, or they would want to try and get that withholding down as much as possible. Otherwise, they're simply receiving less income.
Thank you. And that is about all we have time for today. If you had a question that we didn't get to, we will follow up with you after the webcast, or you can reach out directly to Erin or Jill. And thank you, Erin and Jill, for a great presentation today. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts icon to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window, also to the right of the slide view. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. And here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us today, and we hope you'll join us again next time.